Lots of the first wave of options trading protocol on-chain failed. What did everybody else get wrong that you didn't?
We failed too. We built our first V1 and didn't work out. But I think that was also the reason why now the product is working.
On-chain options actually take off for good this cycle. Is it going to take off market share of Deribit and other centralized exchanges? Or do you think it's going to actually grow the pie?
The pie will grow, is growing with this new type of actors entering into the system. Deribit has been the most successful product. They never made a mistake. Now they got acquired by Coinbase. They either gonna even get more of the pie, or on the other side, that's happened many times with Coinbase, like, the product got integrated and then they shut down.
All right, welcome to Dime TV. Today I'm with Dan, the founder of Rysk. Very excited to do this episode. Let me start with this question, Dan. You're one of the very few people that have been building on-chain options for a while now, and you guys are still standing and still shipping. Lots of the first wave of options trading protocol on-chain failed. So why did everybody else fail, and what did everybody else get wrong that you didn't?
Yeah, we failed too. We built our first V1 and didn't work out. V1 was an options AMM and it was very hard to get organic demand. But I think that was also the reason why now the product is working, because we learned on the field users' behavior, what were the mistakes that we made. So if you ask me, like, what's the single most important thing that you learned out of that experience, is that options are not the product. When you try to sell to users or traders the options, you ended up most of the time being in a losing game somehow. Especially in crypto, there are a lot of there is complexity around it. There is Perps that are way better instrument for most of the use cases. So I'm not saying they're a better instrument for everything, but most of the users want directional trading, and Perp is the easy way to do that. So one thing that we learn is, like, we need to stop selling the options as a product. So it's not about come here and trade options, but it was more about how can we use options for other use cases. So let's put options at the back. We don't even mention that we're doing options. Like, most of the users probably
Yeah.
don't care what is the back instrument, right? So that's the reason why I think race today worked, and that's what we basically learned. And when you think about all the mistakes that in the past we all made, it was we all wanted to fight that a bit. And in reality, I think the main thing to do was actually to just find a different use case for options that it was more friendly for the average user in DeFi and crypto.
That makes sense, yeah. And I think in terms of that survivor story, lots of people failed and gave up, but you guys didn't. You guys failed, came back, tried something else, tried something different, iterated on the idea that you knew there was something to do with upchain options, and you managed to came up of this like series of failure. And I really like this mindset quotes about like life is just a series of failure, and sometimes you end up not failing, and that's what it's all about, I guess, when you're building a company.
Yeah, looking back, I think the failure is where you actually learn, right? A lot of people come to me now. It's like, oh, what you guys built, it was so easy and inside, and then what I say to them is like, yeah, it is, but we were able to do it because we were at that space of like 4 years and learning and talking to the user. So it's not something that you wake up one morning and be like, oh, this product makes sense. It's like you
Yeah.
build that over time. So looking back, like, I think failing is part of the process. I think what is very important though is, like, you need to learn on it, and obviously that's one thing. But the other thing is also you need to understand what's your edge. Like, by failing, like, you need to understand why we failed, and then on that is like, is that our edge? Like, for example, for Rysk, what we realized, like, our edge, it was to understand options. It was to build options product. It's not, for example, to run strategies. It's like, we know options traders or hedge
Mm.
funds or whatever. Like, for us, it's like we can build good products, we can build good infra, we can build safe products around options. We understand those really well. So that's our edge, and that's how we build the Rysk that we call V12, the new product. So I think, yeah, it is important to keep failing, but never forget about learning from them and understanding your edge and double down into your edge. That's probably the most important aspect of it.
Makes sense, yeah. Maybe let's take a step back, and can you run us through like what you did before Risk, what brought you to this space?
Oh yeah, it's a very long story. So I started my first job was investment banking. So I'm coming from traditional finance. I was working for Bank of America, Merrill Lynch. Before that, even Citibank internship. Like all the finance bro type of path. And I loved finance. I think it's like to me the idea of especially like finance in a sense of investment banking. So understanding fundamentals, understanding company, understanding different type of business was actually very good. I think when then you start like an entrepreneur experience, like being from that path is actually very interesting. Like you understand like how business works, right? Plus, on top of that, you also need to understand markets, and markets are probably, in my opinion, the most exciting aspect of our society. Is like you see how people interact from a psychology perspective, a coordination perspective. So that job was great. What I didn't like, and that was probably the reason I left, it was the bureaucracy out of it. So when you work in an environment like that, it's all about bureaucracy at the end of the game. So you need internal committees, you need risk management, and all of that, which it's totally fair, but like being the guy that has to do that all day is just like it's not exciting to me. And back then, I'm talking about 10 years ago, probably even more than that. Technology, especially Web2, was getting very big, right? And so I was like, okay, I think I need to learn more into this. Like this is the new space. This is something I'm curious and genuinely excited about. So I quit the banking job. I moved to Berlin. Beautiful experience, a lot of parties. But on top of that, I started to learn programming and coding. And in Berlin back then, it was also the first time that I actually started to hear about Ethereum back in the day. So I'm talking about 2016, 2017. Um, I didn't do much back then except of, buying some meat for, I like this technology, but I was going meetups. I was, Gnosis Safe was very active and stuff like that. Um, But back then, I also built my own company in Web2. So we were doing online education, software as a service. So I was working on that, excited about crypto, excited about like Ethereum. But around 2019, 2020, that's when I was actually like, okay, this space is so exciting. I started to see DeFi or open finance, I was called back then. I started to see actually real applications. And keep in mind, I was in a bank. I didn't like bureaucracy and so on. And I was like, wait, now this is all in a smart contract. Now I can code a new bank on chain. Like I was, checking Eatland, Aave type of products, MakerDAO. And so I was like, okay, this is like, extremely exciting. But funny story, 2020, I got liquidated on MakerDAO. Early 2020, there was an issue with an oracle. A lot of people remember that. And so I was like, okay, what's the solution to this? Like, I don't want to get liquidated anymore. And I found out about Opyn and they were doing options as an insurance. And so I got in touch with them, very DeFi approach. So I was like, hey guys, hello, what you doing? I think this is pretty big. I'm a user myself. And that's how basically started into DeFi options. So early 2020, I was helping them. And then I loved what they were building. So I got, always deeper and deeper. I started to work with them, and after a few years, year and a half or something like that, I decided that, okay, let's build something on the option space. And the idea was to use Open as an infrastructure, but to focus on the liquidity side. That's why the first Rysk V1 was basically an options AMM on top of Open.
Okay.
And that's how we started. I met my co-founder Jib into Open Discord. Beautiful stories about DeFi summer. Like you go on Discord and you meet your future co-founder.
Yeah.
But yeah, that's basically the story how I got into options and building into options.
Yeah. To explain for like most people in crypto are much more familiar with perps. So can you just explain in simple terms what does selling a covered call or a cash secured put actually get?
Yeah, so a cash secure puts or covered call are a strategy that you can do mixing spot and options, right? So covered call the main idea is you're holding an asset. So let's say you are holding BTC or ETH or HYPE, and you are trying to earn income on top of it. The way you can get income is by basically selling calls. So you are effectively long in the asset, but you're also selling a call on a higher strike. So let's say HYPE right now is a 68. You can do a covered call at 75. So you're getting paid right now premium to sell the call option. So you're getting paid whatever premium it is upfront. And the trade-off of this is like if the price goes above 75, you are committing yourself to sell a 75 because you're selling the call option of that. So it is a very easy way for user to, let's say that there are two use cases of covered calls, or at least that's what we see at Risk. The first one is I'm okay to sell a 75. That's a good exit. So I'm doing a covered call at 75. If the price hit, I'm selling, I'm getting USD, I'm happy about it. The other use case, which is probably even the most common, is I'm trying to make a speculation or a bet somehow that it's not gonna hit 75. So I don't think it's gonna hit 75 by the end of the month. So I'm doing a covered call. I'm earning the income upfront, and I'm waiting for the price to not eat, and I'm making that kind of bet. So that's the two use cases. On the opposite side, you can do a cash secure puts, which is you hold stablecoin, you deposit stablecoin, so you use that as collateral, or that's the asset that you're holding, and you can basically selling a put at a cheaper price. So in the case of HYPE, again, HYPE is a 68. You can do a cash secure puts, let's say a 60. So you are willing to buy HYPE at 60. So if let's say by the end of the month HYPE is at below 60, you're willing and committed to buy HYPE at 60 no matter what. So on the cash secure put side is more of I'm trying to accumulate the asset. So that's more of the use case that we see. Is like 60 I think is a good entry. So I'm accumulating that. Or again, even in this case, the other use case is simply I don't think it's gonna eat. Give me yield on my stable coins, and worst case, I'm just gonna buy an asset cheaper. So those are the two main strategies that we do at Risk, and that's in simply terms how they work.
Yeah, and so the pitch basically is you can earn yield on asset that you hold.
Yeah, upfront income is probably the best way for users to think about, because you actually get that cash flow upfront from the premium. So it's like it's USD dollar paid immediately when you open that position. So yeah, that's the pitch.
Yeah, and so for some people, it might seem almost too good to be true, right? You get your Bitcoin into risk, you get paid just to hold them and to not sell them, or maybe sell them later at a higher price. It seems almost too good to be true, right? Is there any risk
I mean, there
for
are
the users?
different level of yeah. I mean, there are risks, obviously, different levels. So on the purely financial instrument, the main risk about it is like obviously you're giving up the upside, right? So you let's say again you're willing to sell a 75, but let's say hype is going to 100, you have to sell a 75. So that's something that like you are giving up on the potential upside. So for some user that's fine, you're willing to sell a 75, but on the other side you might be thinking about, oh, if I waited I could have sold higher, right? Which is part of the trading. There are other risks associated to it. Like we try to abstract all of this away from our users, but when you're selling an option, the pricing of the option is a function of implied volatility and what people think that the volatility is and so on. So the main risk, for example, is also that you see a price, you're willing to take whatever, and you see that upfront, but the price is a function of something way more complex. So more advanced users can do their own math about it and say, okay, that's the implied volatility I'm getting paid on, and so on. And usually what you're trying to do, you're trying to get an higher implied volatility. But that's also a risk that you can get. Like you can enter a trade when the volatility is lower, which is not ideal for selling options, right? So those are probably
Yeah,
the two main financial risks. Obviously, there
yeah, that
are
makes sense.
other risks, more of like smart contract, for example. They protocols can be hacked. That's part of DeFi. We've done everything as possible, auditing. We've done the protocol in the very simple way. Like the settlement layer is only doing one thing, which is holding asset and everything. But like there is the potential risk. Those are probably like the main ones that I see from our users. But yeah, the main risk is like you are giving up a potential upside. And
Yeah.
so it also matters when you enter the trade. And you have to be willing and happy that you know that you're basically potentially selling in the case of covered call, or buying at the specific price in the case of cash puts.
Yeah, I think it's what struck me the most when I started using Risk. I think around a year ago. It's how simple you actually make it. Like you literally say in the UI, "Are you happy to sell this Bitcoin at this price?" Yes, it's a simple yes no question, and then yeah, of course I'm happy to sell 50% higher than current spot price in 2 weeks. So I'm very happy to take that premium now and get healed. Like for most user, even someone like me who is allegedly knowledgeable about options, like I don't care about IV, about premium or anything. I'm getting paid to keep holding my assets, so it's good enough. I mean, that's what I really liked about Risk. Like you completely abstract the complexity of it and just transform it into pure yield.
Yeah, the thing about that is it's a funny story because like while we were building on options a protocol AMM, and we were thinking about like all volatility and so on, and then when things didn't go well, we basically we had to do a step back and be like, okay, let's sit down, let's try to figure it out, like what users want and everything. And one mental process that we've done is like, what is an option, right? And when you think about like all the complexity that is around the option, is like obviously it happens over over time, and that's the beauty of it. But when you actually think of what is an option, it's like it is a right to buy or sell an asset at a specific price at a
Yeah,
specific date. So when you think about the definition of option, it's actually exactly what you see on Risk, asking to the user. So it's not that we've done anything crazy. We just done a step back, and it's like, okay, before thinking about IV, before thinking about Greeks, before thinking about everything options, it's like, what is an option? What how the option started, and let's focus into that. So if you see the definition of an option, it's basically what we show to the user, and that's the thing, is something that sometimes we tend to overcomplicate, even when we build products and so on. But like at the end, doing a step back is probably the right decision, and that's what we've done.
yeah. I have a question in terms of what the user actually want these days. What type of flow are you seeing mostly on Risk? What type of assets are the people mostly using Risk for? And do you have any interesting pipeline in terms of new listings or um, new asset that people can generate yield on Risk?
Yeah, so I think what users want is like, it depends from users, right? And you can try to do different clusters of users in in DeFi and in crypto. Um, but for example, if you're thinking about traders, and or at least options traders, what they want is like, they're extremely sophisticated, right? So all they want is like, they want as much data as possible. They want all of the information. They want to make like a really well thought decision about it. But what we've done with the Risk, I think we were able to actually target a different type of users, which are, in my opinion, even the most common when it comes to DeFi, which is people holding wealth in on chain into specific assets. And those users, they had all those assets, and it is their wealth. It could be BTC, high, Pete, and all of that, right? And when you think about the most successful products out there, in my opinion, I mean, not all of them, obviously, but like a lot of the DeFi products, like you can think about lending, Aave, Morpho, Euler, you can think about, Athena and so on. They are targeting this subset of
Mm.
users. And then you have the trading products, like, all the exchanges and so on. So I think those two are actually connected, but also different use case. So you can have a trader that at the same time is holding a lot of BTC, right? So what we've done is like, let's offer a product for those users that they hold assets, and that's basically what we've done with Risk and what we targeted. And what they want is, they want something safe, simple, like they need to trust the system. They want to deposit. They don't want to care about liquidations or margining. Like they get the yield. They need to know exactly what happens and when. They want to make sure that the smart contract is safest as possible. And what we noticed too is like there's the amount of asset that people hold are actually a lot. Because obviously you can hold HYPE, but you can also have kHYPE, which is the staking HYPE from Kinetic. And
Yeah.
now by holding kHYPE, you want to earn on top of kHYPE. Or you have ETH, and then you have the Lido, ST or WSA, whatever, and you want to hold on top of that. So the way we design Rysk is like with max composability that you can add any asset, and you can do those strategies using potentially any collateral. So what we've done, and I think this is probably something I'm personally proud of, and I like to share about it. But I talked to a lot of users, and most of them using Rysk was either the first time using an options product, or it was the first time using the options product consistently because they knew what they were doing and what to expect. So probably they tried other products in the past that didn't work, and because of they didn't understand it was too complex, or they got somehow like they got into the wrong trade or whatever. But with Rysk, like some of them, they're like, oh, it's the first time I'm actually using a product consistently about options. So back to your question, what users want? To me, the way you have to think about DeFi and crypto side, there is wealth. We, the industry generated this wealth. Users hold this wealth, and they're trying to earn on top of that. So what is the next for Risk? Is like we need to be able to let all the assets that people hold on chain to earn by doing those option strategies. And the more assets are coming, the more is the opportunity for us to plug into those markets. So right now, I would say HYPE, kHYPE, they are like one of the hottest assets, and we enabled that. I see a new trend of tokenized stocks or even
Mm.
gold, and we are doing options or option strategies on top of that. So the next step is if assets are on chain, we should be able to offer those strategies so users can deposit and earn on top of them.
Yeah. And for RWAs like tokenized stocks or gold, what is the main unlock that Risk brings to these users?
It's a good question. Like I think the first question is why users should hold at the first place the tokenized or RWA's asset. And I myself have like controversial ideas. Like I see, the visionary part of me is thinking about that as the massive unlock. It's like I'm on chain, I can buy anything. I don't have to do, all this onboarding into like
Yeah.
different platforms. I can just get an asset. And obviously for some people, like, I'm European or US people, it's very easy, but then you have to think about like all those markets where it's not that easy, right? So the visionary
Hmm.
part of me is like having a global market, 24/7 accessibility, and so on. It's like it's the massive unlock. Then there is also a more practical, pragmatic part of me, which is like if you today hold like a brokerage account in the US or in Europe, you buy out of it. You also get um, you know tax benefits of doing that and everything like that. So there are like also these reasons to probably brokerage account can be better than DeFi. But then my other point is if we build a layer on top of that, like Risk, where now you can hold the same asset in your brokerage account or in DeFi, but if you use it in DeFi, now you can earn income out of it by doing option strategies or doing lending or doing whatever. Now you have an unlock that otherwise will be way out there. So that's something that your brokerage account simply cannot do. And that to me is like probably the next wave. Like now we have all these RWAs and tokenized stocks coming in, and to me it's like what's going to be the next wave to actually give them a use case. And I think that's what we're trying to test as well with Risk. But yeah, I think I'm myself always thinking about does this make a lot of sense, or it's just like a nice narrative and could be useful for some users, but it's not going to be as mainstream as we think. But the beauty of DeFi is like we just keep building and we'll figure it out. That's it.
Yeah, I completely agree with that vision. Like the even for European and American people, the unlock is massive. Like the if I want to sell covered call on my SpaceX holding, it's not easy at all. Like I'm in some tax compliant type of account, so I cannot do derivatives right now. If I could just have a token and then sell covered call on that, the yield I would be getting because it's so volatile would probably be better than the tax benefits I get from holding in this type of account. So
Yeah,
I think that there is a huge differentiation there, especially for like tech stocks these days that are so volatile. So yeah, I'm excited to see that actual use case of the blockchain tech being used for such things.
yeah. The other thing I think we need to figure it out is like what is the like the clarity around holding a stock on chain. What I like is just a wrapper or something else, you know, of an SPP and so on, or it's actually like a real stock. That's why I think in the next couple of years we're also gonna have clarity about it, because if it's just a wrap, it's fine, but like it's not as interesting in my opinion as I'm doing an IPO and now part of the stocks from the IPO they're gonna directly minted on chain, right? That's actually the beauty that I think the future is gonna look like. And even
Mm,
for a company doing an IPO, the fact that you now have part of your floating that can be traded 24/7 on chain globally, I think is a massive unlock. Like think about all those tech companies who said like now plugging into the on-chain technology, it is probably an unlock for them too, right? So I think the next couple of years is going to be clear also from like regulatory and compliance perspective, like how they're going to look like.
yeah. So you guys just launched Risk on ETH mainnet, and we'll get back to that in a second. But initially, Risk V12 was on HyperEVM.
Yeah,
What did HyperEVM and Hyperliquid ecosystem offered you that other chains couldn't offer you?
yeah. So when I was telling you about mistakes and business decisions and so on, I think launching on Hyperliquid or HyperEVM a year ago, it was probably the best business decision I ever made. The reason is different reasons, but like one, it was to be probably at the right place at the right time. IPE was a very strong asset,
Mm,
and we believed that very early on. And as I mentioned, once you have a very strong asset, doing a strategy like cover a call is a good way to generate income. So I think we were very early on to understand, okay, users now have IPE, it is a good asset, and we can generate income out of it. And so we got there very early. So the community liked the product, they liked the idea. It was also very savvy when it comes to like DeFi derivatives and everything like that. So the community loved the product. They helped us, to grow where we were. So I think that was definitely a massive unlock. From a purely technology liquidity standpoint, um, a big unlock was that now as Risk use an RFQ system. So we have makers, they buy those options, and now once they buy the option, they can basically directly hedge on something like Hyperliquid in a very easy way. The perps are liquid, they can go over there. So at the end, like even having, as I mentioned, multiple option strategies potentially on any asset by having those perps market very liquid on chain on Hyperliquid was definitely a massive unlock. So when it comes to Hyperliquid ecosystem, I would say like the community having a strong asset like Hype helped a lot. The integration within Hypercore and the opportunity to use the perps to hedge also helped to have more liquidity potentially to any asset. So it was a lot of different reasons out of it. Um, I still think it's probably one of the most exciting ecosystem. I'm not doubt about it. I think we're still gonna see new primitives out of the entire ecosystem. Um, and yeah, personally, like I loved everything about Hyperliquid. I think the execution they've done was insanely good.
mm,
The community again is unique. So yeah, personally, like I'm doubling down into it. Lately, we launched also on Ethereum mainnet, and
yeah.
the reason for it is there are a few reasons, but like the main one is like as I mentioned, the whole design decision that we made is to enable any asset to earn using Risk. So by being on a place like Ethereum mainnet and HyperEVM at the same time gives us like way more access to any asset. So this is actually just the idea that now we can offer a product to even more people, even more users, and make that even more accessible, which is the end game for something like Race. So the main reason is Ethereum mainnet still has most of those assets, and we can plug into them. For example, we had users coming as like, hey, I don't know detailed ST. I can, how can I do that? And obviously on HyperEVM, we didn't even have the asset, right? So by doing that natively, now it makes sense, and you basically can max out the potential of the risk design that we made. So that's probably the main reason we decided to expand, like to basically make the product even more accessible. Um, and the other one is also because lately we got more interest from funds, institutions, treasuries, DAOs, like more of those actors, and most of them they also have treasuries, on Ethereum mainnet. So it was a way
Yeah.
to still have the benefit of the protocol for those different type of users. But even today, like after we launched Ethereum mainnet, like the most active users are still the Hyperliquid, and I'm super happy about that.
Yeah, I think in terms of TVL as well, like HyperEVM is very far away from the TVL on mainnet, I guess. So
Yeah, I
it's a
mean,
completely different set of users, but there is much more money accessible there.
yeah, no, 100%. But I also think looking back, like they have two different purposes, right?
Yeah,
When I think about HyperEVM, HyperEVM is like is a programmable chain on top of an exchange. So now you can benefit of one of the most liquid exchange, and you have a chain on top of it. So that's to me the main reason about HyperEVM. Like if you build in any primitive, ideally that can even talk to Hypercore, the exchange, and so on. Like this is a massive unlock. So I see that as more like a financial products benefiting from the exchange, which is Hyperliquid, and that makes a lot of sense. And I think a lot of primitives they're gonna be built around that. When I think about Ethereum mainnet to me is a trust layer, is a trust element layer where most of the assets are, most of the stable coins are settling, and so on. So a product like Risk is like, it just makes sense to try to plug into that. So
yeah,
I think those, they have two completely different reasons in my opinion. And I think basically we're just gonna have two different type of users. The one using on Risk on HyperEVM, they're gonna be happy about it, and then different type of users that will probably not go to HyperEVM at all,
yeah,
and that want to use it on Ethereum mainnet.
yeah. So at the moment, you on HyperEVM, you really benefit from the liquidity on Perps on Hyperliquid. Hyperliquid never really announced working on options directly, but they did launch HIP4 recently. I think it's still in beta, but how does that play out for Risk?
Yeah, I mean, E4 is it's mostly a prediction market. Like it's right now the main markets is either sports. By the way, I played HIP4 World Cup and totally unsuccessfully. Like I lost it all. So don't follow me for like sport tips. But yeah, HIP4 is like you go there and you make a prediction on like winners of World Cup, like I've done it. They also have very short term BTC or ETH or HYPE prediction, but it's usually like you make a 1 day prediction. So the market that they plug in is more of, in my opinion, like it's either prediction or very short term. Like basically to me, that's an alternative to either a 0 day or a sport,
Mm,
0 day option or a sport. Like basically you're trying to bet on what the price is going to be within the next 24 hours or less, or what an outcome of us an event is going to be. What we've done with Risk is that as I started, it's actually completely the opposite. It's like we do option strategies, which is kind of somehow a structured products on top of options. We focus only on generating income of on asset that you also. For now, those products are like not even complementary. They're just like completely opposite rails and targeting different type of users. Now there are rumors of Hyperliquid launching options on their exchange, but I don't know how real they are. I don't know how
mm,
they're gonna look like. Like there's not much available yet. Um, to me, like my main view about it is if they do, and if they're a good product and they're liquid, that probably can be either another unlock for us as well. Like now you can build those structured products potentially on top of it, or even if it's not the same primitive that we do, we can build primitives in the middle with them. So to me, it's like having a very liquid option market is could benefit of it. Right now, the the only liquid or the most liquid option market, and that we all use as a reference is still Deribit, which is centralized exchange and so on. So I'm happy to think that a DeFi version might be there, and that's why I love what you guys are doing, with Paradox of, and I love the way that you started with actually doing on something like that a bit, because you basically tackled the liquidity problem, right? So if Hyperliquid is gonna do it, or you guys gonna do it, and I know you are, I think that's all benefit, because you want a liquid option market as a reference and everything. And what we do is like we make this product easier for everyone. We abstract the complexity away, so that's our edge. So back to the original point, it's like figuring out your edge. Our edge is not to build the best option exchange out there. We're not doing that. Our edge is to package options in a way that we can target potentially any user out there. We make them accessible. We make them easy for everyone to use. And again, if we can plug into Paradox Hyperliquid, it just makes sense.
Yeah. Yeah, I think one of the main challenge that you face, that we faced, and that Hyperliquid might face with options is liquidity. So Hyperliquid is not notably it's order book liquidity until now. I don't think there is many RFQ protocols like plug to Hyperliquid directly. You guys have your own RFQ protocol outside of it. On Paradox, we're pushing hard to use RFQ for everything actually because it just makes more sense. Perps order book liquidity is kind of easy to have now. It's almost a commodity. But options, you're dealing with a very different set of constraints, set of participants. So what was the main unlock that RFQ liquidity offered Risk?
Yeah, I mean, so we started as an AMM, right? Which the main challenge was that now you need to manage the basically like you're building a product, but at the same time you also need to build a system to manage a book of options, which is not easy, and basically you're doing two different jobs. It's like a product plus managing an options book, which by the way is probably one of the hardest, hedge fund job to do, is like managing the options book. So after that, we've been thinking it's like, oh, should we do an order book for options, right? Similar to the trend of that, of like similar to Deribit, for example. The problem with that is like now for every strike price, for every expiry, for every product puts and call, you have a single order book. So now you need a market maker to go there and quote every single order book. So you might have hundreds of them at the same time.
Yeah,
And options, they have a different capital efficiency on average than perps, because short to longer perp like is very capital efficient. But if you're shorting an option on margining as a market maker, and you need to commit liquidity all around those books, like it's completely inefficient. So what RFQ unlocked for us, and the thing for you as well, when you think about paradigm back in the days, on Deribit and today, it's like now you have a system where you can trade in size, and you can basically ask into the counterparties like, hey, who wants to take this trade? Which, in my opinion, is a massive unlock, because you don't have to commit beforehand to anything, even though there might not be any appetite for those products. Because right now, like on an order book, you might need to provide liquidity for a year out of the money option on hype of 120 a year from now, and probably there is not a single user that wants that, right? But you
mm,
still need to commit that liquidity. With the RFQ, you do the opposite. It's like, hey, there is a single user that wants that option out there, who's willing to take the counterparty on the other side, and at what price. And you as a user, it's like, okay, I like this price, I'll do the trade. I don't like it, I don't do the trade. So for perps, the high frequency and order book and so on, like it matters a lot. That's actually the edge. For options, it's more, as we said, it's more it's like how good is pricing, can I do size, um, are you willing to price a very specific instrument or option combination? That's why the RFQ, I think, is the best execution for option. And
yeah,
even for us with the RFQ, like we every time you want to open a position, on the other side we have a bunch of desks, and sometimes some desks they're pricing very good, sometimes they don't, but the other other desks they do, and so on. So that's why I think that's the massive unlock, so you have them ready when you need.
makes sense. Yeah. So this cycle might actually be the first time that on-chain options actually start to take off. There are a few protocols playing in that field. You guys have had really interesting growth over the last year. We just launched options and start to see very interesting flow. Do you think that if on-chain options actually take off for good this cycle, Is it going to take off market share of Deribit and other centralized exchanges, or do you think it's going to actually grow the pie?
So I think it's going to be a mix of both. Um, the pie has to grow and will grow as more actors are entering into the space. DeFi and on-chain is getting more institutional. It's getting like, think about the Vaults product, for example. It's very TradFi, people using them. It's very easy to sell, you know, those products to TradFi. We see more institutions, we see more that. So those are the actors that I also see as a potential user for something like options because they have, more niche use cases that options can fit. So I think the pie will grow and is growing with this new type of actors entering into the system. On the other side, and this is probably more of I don't know, my personal challenge thinking about it is like Deribit has been the most successful product, and I think they've done a crazy execution since basically what 2019.
Hmm.
They never made a mistake. Let's put it this like obviously they've done it, but like overall they've done everything good, right? Um, Now they got acquired by Coinbase. So I think now I mean, not now, but like it's almost a year not now. But I think this is probably the critical time where they either gonna even get more of the pie because now they have the Coinbase legitimacy, easier for institutions to onboard because of Coinbase, easier to go to, for example, American retail users and so on. So I see Deribit here being in a position where it can either get way bigger and eat all the market for for it, or on the other side, that's happened many times with Coinbase, like the product got integrated and then they somehow even shut off like years, they shut down years later or whatever. So I think that a bit right now is in a very interesting position because
Hmm.
the opportunity to grow is massive, but on the other side now you get founders that they left and I don't even know them. So this is purely based on I imagine them, like you sell your company and after being grinding for like 10 years, like, are you able to keep that motivation inside? I don't know. Now you're part of a bigger team like Coinbase. Can you benefit of it? Or like, this bureaucracy and complexity gonna actually kill the product? It's gonna be interesting to see.
Hmm.
Um, I have to say that so far, for example, I loved how they been adding more assets, something that in the past, for example, they were not doing. They were very conservative. So it's hard to know, but there might be an opportunity where this product is again not growing as they used to, and that means that there is obviously an on-chain opportunity out of it.
Yeah.
We'll see. I mean, it's all speculation for now.
Yeah, the way we see it is obviously it's still going to be one of the main venue for institutions, and especially since now they can access the American market. But they will still lack the flexibility that on-chain protocols can have. Like for us, for instance, we've been doing crypto options until now, like Bitcoin, Hype, and Sol. Like, okay, it's cool, but that's not really where the actual product fit is. The actual really interesting stuff that you can do with options will be when you can start listing oil, S&P 500, Nasdaq options, and Deribit has no reason to do it because if you want to trade those, you can go on TradFi. But on chain, you unlock like a whole new category of users, and that's where I want to be in the next couple of weeks. Like we just are about to list oil, I think, and then users can be long oil, sell covered call, do iron corner, any type of strategies on oil options, and then I guess ultimately also use risk. Like if you want to have a simpler UI to just hold X stocks and get yield out of your holding. I think on-chain will be the market for this. So it's not for crypto options, more like for options in general, and it unlocks a brand new category of users of TVL that will be used for this product.
I think it makes sense because think about the history. Like to me, it's important to always like think about the history of certain products, right? So when you think about crypto, right, and when crypto got real mainstream, we already had like Bitmax, for example, with Perps, right? So even Deribit got traction when Bitmax somehow slowed down after some regulatory issue and so on, and like and people started to actually do it. a bit of more options. So the idea is like crypto natives are actually more used of perps rather than options. Like that's the, that's how they used to, and that's how they grow. And then think about FTX. Then go massively with like perps and everything. Thinks about Binance. Like that's what crypto users are coming from. But when you think about the TradFi products, so you mentioned like oil, you mentioned SpaceX, whatever. Now you're targeting a different market out there, and I do see those people actually doing perps. But at the same time, once you are used to options and you are already an options traders on those instruments, you still want to do options. Like once you got comfortable with it, like I don't see all those options people turning into perps.
Mm.
I probably can see new people getting into perps for sure. I think I see a massive opportunity, but I still see a lot of people still want to do options.
Yeah.
And I have a lot of friends coming to me and it's like, hey, you know how to do options, you should do that. You know what I mean? Like that's kind of an edge. So I do see that like for traditional market, actually like the idea of having options is bigger, and to do that in DeFi, as you said, like, you can do them more flexibly, without less friction, and there are a lot of benefits of doing it. So I think that makes sense. And again, I think today, if you have a direction view on BTC as a crypto native user, you just go open a pair of 10x long and that's it. But if you're a TradFi user on Wall Street bets and you want to long BlackBerry options right now, um, probably Onchain is a good venue to do that, and that's what I probably think is going to happen, because those guys, they already know what an option is. They
Mm.
made money out of GameStop in 2020 with options, with OTC long call options out of the money, right? Sorry, out of the money call options. So I think those guys are the ones that are actually still gonna do that. So I
Yeah.
think that just makes sense.
Yeah. Is there any product that you haven't shipped yet that you're excited about?
Um, Risk Premium is something that we shipped, but like in a closed institutional way. Now we're gonna open that up, which means actually products on top of the current risk. So think about asset managers, ETF institutions, or curators that can actually run vaults on top of our infra. That's something that we right now we only do it with in a permissioned way with a few institutions, but we're gonna open that up. That's a very good product for treasuries, curators, and everything, that is coming to you. Um, I think there should be other vaults. I think ideally also using more products like Risk and Paradigm or Risk and Paradex out there. I think
Mm.
those are like some of the things that we should ship. So I think there's gonna be something like that as well. But like yeah, overall less risk, more assets. We're gonna keep more integrations. We're gonna double down into vaults on top of the current infrastructure, and that's already a lot of work.
Yeah. Exciting times, but yeah, it's time to. Do you think it's a bear market right now?
Yeah, it is a bear market right now.
Yeah.
I would say so.
So
Yeah,
it's time to build.
it's time to build. I mean, what else you gonna do? Like it's just building is fun. At the end, it's like building a bear market is also, in my opinion, the best edge.
Yeah.
Worst case, you are doubling and you're trading yourself basically, right? Like you're trading your experience, your edge. So building a bear market is the best trade. That's the way I think about it.
Maybe as a final question, you are famously the boss man of the Italian DeFi mafia. Can you say anything about the current state of the Italian crypto scene?
Yeah, so the DeFi Mafia is it's just a Telegram group that we started with a few Italian friends, and when we're like going conferences and so on, to share some alphas on conferences, like, oh, this side event is good. And then some people started to be like, hey guys, I know you have a group. I know most of you that doing DeFi, and back then it was like a lot of DeFi derivatives, which was like pretty unique, like doing options and stuff like that.
Mm.
Um, but the Italian crypto scene is not the most active. Like I have to be honest, like or at least it's active. It's not the biggest. So all of our, the DeFi mafia guys, like we are very active. We love what we do, and we're very passionate. But it's just a small community. Um, but when you think about Italians in crypto, is probably one of the biggest. Like think about some projects like Tether is built by Italians, right? So,
Mhm.
or you can see a lot of different projects with like very good Italian people. So I think crypto is big among Italian peoples that build very great stuff. But when it comes to actually Italy, as a geographical country and ecosystem, it's probably not the most active. It's not the biggest. Like obviously there are issues like as all around Europe. So I would say to people like don't move to Italy thinking about it's gonna be the best crypto scene. Move to Italy for a lot of different reasons, weather, food, and everything like that. But not for the crypto scenes. But be friends of Italian people because we are doing great stuff. And that's basically what you do, Nick, as well. Like, you're a friend of the mafia, so that's all you need.
Friend of the Mafia. I read
Friend
that
of
on
the
LinkedIn now.
friend of the DeFi mafia. Your
All
DeFi
right.
mafia lied.
Well, sounds amazing, man. Thanks a lot for coming to the podcast today. I think we had some very interesting topics discussed. So yeah, I'm very excited to seeing what Risk comes up in the coming months. Working more together, of course, and then yeah, we'll keep in touch.
Yeah, thanks for having me. And same, like excited to see what products is building. It's like let's build those options together. That's the way it should be.
Yeah,
Let's grow the
roll the
pie. That's it. We need to grow the pie. That's it.
for the pizza.
Yeah, let's grow the pie.